Welcome to the channel. The UK economy is facing a complex challenge: high inflation and rising interest rates. If you ask me, I will say this conundrum is a formidable task for policymakers and economic stakeholders, as it has a profound impact on both businesses and consumers. So, what is inflation? Good question. Inflation refers to the sustained increase in the general price level of goods and services over time, eroding the purchasing power of money. Welcome to the Investment Analysis YouTube channel. Grab a cup a cup of tea, and then subscribe. Thank you. While some economists believe that inflation is a normal part of a healthy economy, high inflation can be harmful to businesses and consumers. Okay, now, let us examine the figures. The present rate of inflation in the UK is 6.7% as of August 2023. This is down from 6.8% in July. Please note, the figure is fluid and keeps changing. Nonetheless, it is still significantly higher than the Bank of England's target of 2%. Therefore, many people, including you and me, should be concerned about the current high inflation rate in the UK. In this video, I will examine and try to analyze the main cause of inflation. So, stay tuned. 1. The war in Ukraine has caused energy prices to rise sharply. 2. Brexit, which has made it more difficult and expensive to import and export goods. 3. The introduction of high interest rate, which is having a significant impact on households and businesses in the UK. So the question is, why does the government introduce high interest rates when it seems like unfavorable economic policy? Well, now listen to this. Interest rates are a good tool that central banks use to manage inflation. When inflation is high, central banks raise interest rates to make it more expensive to borrow money. This reduces demand for goods and services, which can help lower inflation. However, high interest rate can also slow economic growth. This is because businesses are less likely to invest and hire new workers when the cost of borrowing money is high. Now, I'm convinced you understand the role of the central bank. Essentially, it means central banks must strike a delicate balance between managing inflation and promoting economic growth. In effect, when inflation is high, they may need to raise interest rate, even though this could lead to slower economic growth. Okay, now, let us examine the impact of Brexit on the UK economy. A. The depreciation of the pound. The value of the pound has fallen significantly since the Brexit referendum. This has made import more expensive, which has pushed up consumer price. B. Increased trade barriers. Brexit has created new trade barriers between the UK and the EU. This has made it more difficult and costly for businesses to trade with their European partners. These costs are often passed on to consumers in the form of higher prices, thus making it more difficult and expensive to import and export goods. Okay, let me elaborate. You see, because of Brexit, UK businesses that import components from the EU now has to pay tariffs on the component. This can make the businesses product more expensive to produce. Again, a UK business that export goods to EU may have to deal with delays at the border due to increased custom checks. This can disrupt the business's supply chain and lead to lost sales. Reduce labor supply. What does it mean? You see, Brexit has made it more difficult for businesses to hire EU workers. This has led to a shortage of workers in some sectors, which has put upward pressures on wages. Higher wages can lead to higher prices for goods and services. Now, take a sip of your tea or coffee. And don't forget to subscribe. Moving on. Okay, here are the good news. The UK government and central bank has put in place several measures to mitigate the impact of inflation on households and businesses. These measures include A. Raising interest rate, which of course I've discussed very well in this video some few minutes ago. B. Providing financial support to households. The government has announced several measures to provide financial support for households struggling with the rising cost of living. These measures include a one-off payment of £650 to low-income households, a doubling of the warm home discount for pensioners, and a £400 discount on energy bills for all households. C. Supporting businesses. The government has also announced several measures to support businesses during the current economic downturn. These measures include a cut in corporation tax, a reduction in business rates, and a new energy support package for businesses. However, please, this is key, listen to this. Inflation is at 6.7%. Meanwhile, the latest target set by the Bank of England is at 2.25%. However, some economists, analysts if you like, believe that the next target rate could be as high as 5.25%. Okay, now, in summary, let's look at the positive impacts. You see, higher interest rates make it more expensive to borrow money, which can help to reduce demand and slow down the economy. This can help to bring inflation down. Higher interest rates also make it more attractive to save money. This can help to reduce the amount of money in circulation, which can also help to bring inflation down. A stronger pound sterling can also help to reduce inflation. Higher interest rates make the pound more attractive to investors, which can lead to a stronger pound. A stronger pound means that imports are cheaper, which can help keep prices down. Okay, now let us examine the negative impact. Higher interest rates make it more difficult for businesses to borrow money and invest. This can lead to slower economic growth and job losses. Higher interest rates can also make it more difficult for people to afford mortgages and other loans. This can lead to financial hardship for some households. Higher interest rates can also reduce the value of assets such as stocks and bonds. This can make people feel less wealthy and can lead to a decrease in spending, which can further slow down the economy. Now, I'd like to hear your opinion on the subject matter. What do you think? Will inflation be curbed and reduced to say 2%? Please comment below. Okay, thank you for watching. I hope you found this video informative and helpful. If so, please like, subscribe, and comment below. Together, we can build a community of learners and collaborators who are committed to generating wealth, building companies, and then creating jobs. Thank you. I look forward to seeing you in the next video. Bye now.